Good morning, everybody. I'm Dan Hussey with Zaner Ag Hedge, here to bring you an update on let me just make sure I'm using all the right settings. All right, so we're going to get going here talking about the soybean market. Remember, trading futures involves risk and is not suitable for all investors. And everything I talk about here today is just my own opinion and not a direct recommendation. So let's begin by just taking a look at that January soybean market. Price action has finally broken down and capitulated below, a new contract low being made yesterday on increasing volume. This last week, well, last several weeks since the start of December, we basically at the end of honestly midway through November, we were caught in this upward choppy sideways consolidation, bare minimum of higher highs and higher lows in this channel that finally broke 2 days ago. Started to break below that 990 figure, held there in yesterday's trade. Today it broke down to a new contract low. Overnight, we found a bounce back to find that contract low is basically new resistance and have already started lower here, down 12 and 3/4 cents into the open here in just a few minutes. This consolidated structure failed to get back above $10. It held downward sloping trend lines that we've been below since, oh gosh, September. And when we take a look, at the guys, can we be doing a video real quick? Sorry. Um, uh, There we go. There's our daily chart of means. And we've been holding below that 18-day moving average as we started to break below there just a couple days ago. That is going to be our kind of short-term trend indicator, bearish below, bullish above that 18-day, as well as this downward sloping trend line. The $10 figure ends up being an important level above. But we also need to consider, some of the patterns that we formed in this market to potentially give us some downside projections in the near term. Last few days, we've seen increasing volume. We are now in oversold category in the RSI, but that doesn't mean that we can't stay down here, in the near term and continue lower ultimately. So we had a bit of a head and shoulders pattern on the chart. Little left shoulder here formed back on October 24th, a head up at 1043 at the October-November high, and then a little right shoulder that kind of formed multiple times as we consolidated sideways below the 10 level. The downside projection from that would take us to a 39.20 target. That's simply 70 cents basically below the neckline, and that could extend down to $9 effectively. Not saying we necessarily go there, but if we are breaking lower out of this consolidated structure, that's a downside target to continue or to consider. The real thing I wanted to bring everyone's attention to today was these multi-year trend, monthly chart trend lines that we're seeing on the soybeans. Let's go back in time and check out 1978 through 2008, where we basically were holding a $4 to $5 low in the bean price and a $11 to $12 high in all of our equity peaks. The market consolidated around the $7.50 to $8 mark is kind of its median price. That arguably every so few years was some of the best opportunities to sell soybeans between 1978 and 2008 were on pushes above $8. The market has been holding an upward sloping trend line since 1969 that it held again there in the early 2000s around 4, and arguably that comes somewhere around $6 now. I like to use a concept called a parallel trend line, where we take that same slope and intercept it with the current lows on the market or the current range. That new parallel trend line has support somewhere around 850 on the beans. Now, there's a more aggressive upward sloping trend line that began back in April of 2020 or 2002. We've held a low here in February 2005, excuse me, November 2006, and again here back in June of 2019, and the lows that we had going into basically COVID. Then we had that inflationary move in the pretty much every market around the world, right? That drove price of beans up to their highs again, but we were unable to really break out of all-time highs and really that $16 to $17 range that has capped the market for the last 10 years or so. This range we're starting to find between $8 or $9 to the supportive and value end to 16 to $18 in the top end is very reminiscent of the start of the range that we had back in the 70s between $4 and $12 range. So you're getting these $6 to $8 ranges in beans setting up again for another decade that I believe could last for yet another decade. That means that we're probably coming down into value area on the soybean market in the market, and we have this upward sloping trend line again that comes in just below us around the 920 area, aligning with some of those downward price projections on the shorter time frame charts. And it has to be said here, when you look at the continuous contract, although we're making new contract lows for the Jan, March, May, July beans here for this next marketing year, we are nowhere near the actual low in price that this market found, around 935, and at least the front month futures found back in August of 2024. So, we still have ways to go to get to the front month or the spot price of lows of, soybeans. And that's why I'm not so convinced that we're going to stop below getting, before getting to that 930, 935 area and intercepting this upward sloping trend line around 920. The low nines seem to be where that value is. Now, we could go lower, right? You could anywhere between basically 935 to $8 seems like a value area on the monthly time frame chart. We're oversold now, for a bit here on our stochastics and our monthly indicators. And generally speaking, we can remain oversold longer than most can remain liquid. Market's going to open up here in about a minute, so I wanted to kind of leave everybody with the idea that while this is a bear trend, we are breaking down lower and be prepared for a little bit of a rocky road. I do think the end is near for this downside. The capitulating moment for soybeans is just around the corner, and a plan for potential reownership. Once a bottom has formed, takes you down into what could be a value area on the soybeans. With that being said, everybody, I'm Dan Hussey with Zaner Ag Hedge. You can find me over here on X at Daniel Hussey Jr., Dan SOTD on Facebook, dhussey@zaner.com, or give us a call at 312-801-4231. That's 312-801-4231. Leave a like, a comment, or follow along to get all the updates from my strategy of the day updates. Have a good day, everybody, and we'll be back with you as price action develops. Take care.